First off, on the tariffs, right? The oil incoming from Canada, which potentially could drive up prices or make it a lot harder for refiners in the Midwest, et cetera. How do you see things playing out? Are the Canadians going to have to eat it on the margin, or are folks going to just have to live with higher gasoline prices on the other side of the border?
Yeah, so that's definitely a good question. I would say our economists, they still assume that Canada and Mexico will likely be able to avoid this across the border tariff increase. It remains to be seen. It's still very uncertain. But if it were to happen, it's definitely something that would impact, we think, the overall balance of the market. Initially, though, to your point, those U.S. Midwest refineries, they are set to use that quality of crude. They don't have a lot of choices, so it's difficult to substitute or just to avoid buying that oil altogether, at least initially. So yeah, we could see some initial impact for consumer prices in the U.S. as a result. But our base cases at the moment is that we expect oil prices to average close to $70 WTI next year.
Yeah, Sam, you brought up a very interesting point, and I think a good one, right? These refineries that you talk about, the feedstock, the stuff coming over the border from Canada, they cannot switch feedstock so easily. So it seems like Canadians would have the advantage or leverage. Would you agree?
It's probably a situation where each side has its own limitations because refineries have that lack of option, but Canadians also don't have that much ability to send the crude elsewhere. So we think that initially it's more likely to be a limitation on the consumer side because there is no alternative for those refineries.
All right, Sam, let's get to the bigger picture and what Pump wants to do in terms of deregulating energy and Pump Baby Pump. Right, you've got the nominee for Treasury Secretary, Scott Bessent. One of his threes is getting oil production up to an extra 3 million barrels a day. What do you make of that plan, given the fact that the U.S. is already at record production capacity right now? How easy or hard is it going to be to get to that extra 3 million barrels?
Well, I think you touched on the key point right there. The U.S. has not only been at a record, it's been breaking records. It has continued to grow both oil and gas production over the past several years. So even if we look at the average growth, and by the way, I think we would need to include not just growth in crude production, but also natural gas and natural gas liquids. But if we put it all together over the past few years, the annual rate of growth is over 1 million barrels a day of oil equivalent. So essentially, if the U.S. continues to do what it has been doing, it can get there.
Oh, okay. It can get to that extra 3 million barrels a day. Understood. But, other parts of the Trump policy that we know of or are, well, frankly, speculating about right now, which could drive up the price of the dollar or make dollars stronger, in other words. Wouldn't that be, how much would that offset U.S. competitiveness? I'm curious. In terms of oil, which obviously is priced in dollars.
Yeah, we think that there's definitely this impact of a stronger dollar makes oil more expensive in non-dollar economies, to be sure. But overall, when we look at the way oil is valued at the moment, if we look at current prices compared to the level of inventories in the market, I would say oil is undervalued. So we expect over the next several months this revaluing of oil to actually take prices higher towards $78 a barrel for Brent in June next year.